What's going on, Pi holders? And I'm back with yet another update for you. Today, we've got some critical updates, an event that could shake the crypto markets in a big way. The Federal Reserve's FOMC meeting is happening, and this could be the turning point that finally pushes the markets into a full-blown bull run. Now, before we dive in, remember, this is never financial advice. I'm just sharing the plays that I'm in, giving you insight into my perspective. If you're new here, smash that like button for the YouTube algorithm so more people can discover the Pi community, and consider subscribing to stay informed. All right, let's get into it. Pi coin has unfortunately retraced back to its support level after the much-anticipated Binance listing on March 14th. Pi Day didn't happen. The hype was real. Investors were banking on that catalyst, hoping for a quick pump to a new all-time high. But when the listing didn't come through, many of those speculative buyers panicked and sold at a loss, pushing Pi back down to its current support at $1.30. There's a chance we dip further to $1.22, but hear me out, I'm not worried. Here's why. I don't see Pi as a short-term trade. This is something I want to accumulate over the next few years. Even if you're not in it for the long haul, holding for weeks or months could still bring you double or even triple-digit green days. We've seen what bullish momentum can do. Pi ran from $1.50 to $3 in a single push. Right now, we're consolidating, forming a solid bull flag, and waiting for the next breakout. For those who follow technical analysis, you can see it yourself. We've been in a downward trend, trading below the 10-day and 20-day moving averages. But this is normal for a new token like Pi. Many people were trading IOUs before Pi even hit its mainnet, so this price action is part of its natural development. The key is watching for that breakout. Once we break out of this descending wedge, it could be the start of something huge. Now let's talk macro. The broader crypto market is consolidating as well. Bitcoin is holding at $84,000, Ethereum over $1,900, and Solana hitting $128. Pi has dropped in ranking, falling from 11th place to 12th, but it's still maintaining a strong $9.2 billion valuation. That tells me one thing: when the market flips bullish, Pi is in a prime position to rally hard. And here's the kicker. Pi has never seen an official bull market yet. Since its launch, it has only experienced bearish or sideways conditions. But that could change very soon. So, what should we expect from the March Fed meeting? If you're new to this, let me break it down. The U.S. Federal Open Market Committee, FOMC, is set to meet on March 18th to 19th to discuss monetary policy. Market expectations suggest they will keep interest rates unchanged at 4.25% to 4.5%. Why does this matter? Because interest rates dictate how much liquidity is in the market. High rates make borrowing expensive, which slows down the economy and makes investors risk-averse. Low rates, on the other hand, encourage spending and investing, aka bullish for crypto. Right now, the market is pricing in a very slim chance of a rate cut in March. But all it takes is one hint from Jerome Powell, the Fed chair, for things to shift. If he signals that rate cuts are coming sooner than expected, we could see an immediate market rally. The Federal Reserve has been working to bring inflation down to 2%, and while we're not quite there yet, Powell did say in February that he'd be happy to see progress toward that goal. If his tone shifts from hawkish tightening policy to dovish easing policy, then get ready. This market is about to take off. We've already seen some major corrections. Bitcoin dropped from $109,000 to $77,000, a 30% correction. Stocks have also pulled back, and real estate has slowed due to high interest rates. But all of this points to one thing: the pivot is near. Once the Fed starts easing, money will flow back into risk assets like crypto, pushing everything higher. And Pi coin, sitting in the top 15 cryptos, is perfectly positioned for takeoff. Now let's talk about something important: the role we, as investors, play in shaping the market. There's been a lot of buzz on social media about how exchanges, like Binance, should be more transparent about Pi's listing status. A parody account of Dr.Nicholas Kokkalis, one of the founders of Pi, recently called on the crypto community to demand transparency. This post racked up over 321,000 impressions, showing just how passionate people are about Pi. Remember, exchanges exist because of us, the traders, the investors, the market participants. If we unite, we can influence decisions. So, if you're part of the Pi community, stay vocal, stay active, and keep the pressure on. Now, switching gears, let's talk about the opportunities coming up. The next 24 to 48 hours are critical. If Powell hints at rate cuts, expect a strong rebound in the crypto market. If not, we might see more consolidation before the inevitable breakout later this year. Either way, I'll be here to keep you updated. Before we wrap up, I want to leave you with this. The crypto market is a game of patience. Every major rally starts with periods of doubt, consolidation, and even fear. But those who stay informed and hold strong during these moments are the ones who reap the biggest rewards. The road to financial success isn't always easy, but it's worth it. So stay disciplined, keep your strategy in check, and trust the process. All right, that's it for today's update. I appreciate each and every one of you for tuning in. Make sure to hit that notification bell so you don't miss my next video. And, as always, keep investing. Peace.